Hey guys, this is Alex Awari from ONG Tax and Accounting Services. So if you're watching this video, chances are that you've been granted a stock option or you've exercised a stock option and want to know the tax implications. This video is going to be the first series of three-part series where we'll be talking about various scenarios of taxpayers that exercises incentive stock options or ISOs. The first video here, the first presentation, we're going to talk about a case where a taxpayer exercises the ISO but sells nothing. And then we also talk about one where the taxpayer exercises the ISO but sells 50% in a disqualifying sale. And then we also look at where they exercise it but then sells all of it or 100% in a disqualifying sale. So in a year where you exercise your incentive stock option or ISO, your employer is going to send you Form 3921. And 3921 is going to label out, when the option was granted, when you exercised it, what the exercise price is, and then what the fair market value is. It will also show you the quantity. So in this 3921, we have a hypothetical employee whose name is Nate Johnson. So we could see that back in 2014, Nate was granted a stock option. Fast forward to 2021, he exercised it at $1 and then he exercised the 1,000 quantity. So basically, the exercise price is basically the amount he paid out of his pocket to purchase these stocks. So it means that Nate spent $1,000 to purchase all of these 1,000 stocks. Now, Nate also purchased these stocks when the stocks was actually trading at $10 or when the fair market value was $10. Now, for publicly traded companies, it would be what the stock was trading as at the time Nate exercised his option. If your company is privately held, then, because it's not traded on the stock exchange, then it will be the fair market value of the company's stocks based on whatever valuation that company was using. So it's just as simple as that. So in this case, we know Nate exercised 1,000 quantity and he exercised it by purchasing them at $1 each, which is $1,000. So now that we have all the information available on 3921, we're going to put them all together and see how it makes sense when it comes to the AMT and the regular tax impact as well. So in the US, we have two tax system structures that's running parallel to each other. We have the AMT taxes and then we have the regular income taxes. Whenever we do your tax return, we run both of them parallel to see which of the taxes is higher. If your AMT tax is higher, you pay AMT taxes. If your ordinary income tax is higher than the AMT, then you pay the regular income taxes, okay? So throughout this presentation, I'll be talking about regular tax and then I'll also talk about AMT tax. Now, in a year where you exercise an ISO and does not sell anything within the same year or less than a year, you're going to be holding on to these stocks. Now, this holding period is very important because the regulations or the rules surrounding ISO requires that for you to qualify for long-term capital gain treatment, you must hold these stocks 2 years from the date it was granted or 1 year from the date you exercise it or from the date it was exercised to you. So in actual terms, you need to qualify for both holding periods. So for example, the 1 year is even very important because when you exercise it today and you sell it tomorrow, it's not gonna be a capital gain issue. It's gonna be an ordinary income tax issue. So let's move straight to this example where Nate exercised his ISO but does not sell anything. So because he did not sell anything, we know there's 1,000 left. Now, the AMT ISOs, when you exercise an ISO and does not sell all of it, most of the income, it's not going to be subject to ordinary income taxes, and so there's not going to be any regular tax income tax to pay on it. But you're going to be paying taxes on AMT. So it's going to be added. This is one of those ISO, the spread added to your AMT taxable income. So we're going to come through here and show you how we got this 9,000. Now, ISOs are AMT preference items, so they get added to your AMTI or AMT taxable income, and then whatever taxes it is that you pay, you figure it from there. So let's move on to how we got this. Now, we got this by when you exercise the stocks, there was a fair market value, and then there's the exercise price, which is $1. So the difference between your fair market value and $1 is $9. So basically, what you're being taxed on the AMT side is 9,000, and we got that by multiplying your spread by the quantity that was remaining at the end of the year. So this is what get added to your AMT tax. So for regular taxes, you're not going to see anything added on your W2. Box 14 and box 1 is not going to be showing any information because you did not sell any of the stocks. You continue to hold on to it, and so it's assumed that you qualify for the holding period, and the only tax implication that you're going to have is to pay the AMT tax. So if your AMT tax end up being higher than your regular taxes, then the AMT tax is what you pay. So whatever taxes that you need to pay on the 9,000 becomes the AMT tax. Now, how does the AMT tax impact your current year tax return? So in 2021, because you held on to these stocks and this was added to your AMT income, you're going to do all your calculation. So the only thing I'm covering here right now is specifically to this presentation, which is your incentive stock option. So in this case, we know that your spread times the quantity that was remaining is 9,000. So this is what gets added to your AMT. The form that's used to figure out your AMT income is 6251. It's used to figure out your AMT income, and then also it's the same form that's also used to figure out what your AMT taxes is going to be. So that's what it is for the current year. Now let's look at the future year. When you sell the stocks, if you hold on to these stocks and you sell them within the qualified holding period that you're supposed to hold it, and you want to get the capital gain treatment, but whatever it is, you still need to know your regular tax basis for the stock yet to be sold, and then you also need to know your AMT basis for the stock yet to be sold. Now, on the regular tax side, we know that how we got $1,000 was to multiply your exercise price, which is the money you paid out of your pocket, multiply by the quantity that's remaining or the quantity that you exercise. So that's going to be 1,000. Now, how did we get AMT basis to be 10,000? AMT basis is 10,000 because in the current year 2021, you were taxed on 9,000 on the AMT side. And so we're going to add the 9,000 plus what you actually paid out of pocket for these stocks. So you have 9,000 plus 1,000, that gives you 10,000. Now, these two items are very important because when you sell the stocks, like I said, you have two parallel systems, that's tax system that's running. You have the regular tax system, and then you have the AMT tax system. Your basis is going to be different. Your basis for regular income tax purposes is going to be different from your basis for AMT purposes. So it's really important that you keep record of this basis so that when you sell your stocks, you could actually use proper basis and make sure that you're not being double taxed. Now, the basis is even more important when you sell these stocks in the future years or in the subsequent year. Let's say you sell it in the following year because you pay the AMT taxes in the current year for 2021. Those AMT taxes, when you sell part, some or all of these stocks, some of the AMT taxes is going to reverse off in the subsequent year in which you sold those stocks. So it's very important that you keep track of all your bases to make sure, number one, to make sure you're not being double taxed, and also to make sure that you're getting your AMT tax credits in the subsequent year where these stocks were sold. So this is the end of the presentation for the first series that we're doing. And in this presentation, we talk about where the taxpayer exercises the ISO but does not sell anything. So if you're someone that has this issue and need a CPA or tax preparer that can help you to figure out what your bases are, what your AMT and your ordinary income taxes or regular income taxes is going to be, always feel free to reach out to me. You can use the link below and get in touch, and I'll be happy to help you prepare your tax return accurately. Once again, this is Alex from ONG Tax and Accounting Services, and I'll see you on the second part of this series on ISOs.